Hello and welcome back to With Sikhya, your channel for financial education. In the last video, we discussed about the basics of what mutual funds are, their advantages and disadvantages, and their types and some related concepts. In this video, we will go a step further by discussing 10 basic strategies for beginners for investing in mutual funds. For beginners, investing in mutual funds can be a prudent way to start building wealth over the long term. Before we begin this knowledge session, quick reminder to subscribe to our channel With Sikhya, and if you like this video, do give it a thumbs up. So here are some basic investing strategies tailored for beginners in India. Number 1. Start with SIP or Systematic Investment Plan. SIP is a popular investment strategy where you invest a fixed amount of money regularly, usually monthly, into mutual funds. It allows you to invest systematically over time, regardless of market conditions, and benefit from rupee cost averaging. SIPs are particularly suitable for beginners as they enable disciplined investing with small amounts. Number 2. Understand different types of mutual funds. In India, mutual funds come in various categories, including equity funds, debt funds, hybrid funds, and others. Beginners should take the time to understand the characteristics and risk profiles of each type of fund before investing. Equity funds are suitable for long-term wealth creation. Debt funds provide stability and income, while hybrid funds offer a mix of both equity and debt. Number 3. Assess risk tolerance. Determine your risk tolerance level based on factors such as investment horizon, financial goals, and comfort with market fluctuations. Equity funds generally carry higher risk but also offer the potential for higher returns over the long term, while debt funds are lower risk but offer relatively lower returns. Number 4. Start with large cap or multi-cap funds. For beginners, it's often recommended to start with large cap or multi-cap equity funds. Large cap funds invest in well-established companies with a track record of stable performance, offering relatively lower risk compared to mid-cap or small-cap funds. Multi-cap funds provide exposure to companies across market capitalizations, offering diversification within a single fund. Now, market capitalization refers to the value of the company's shares in the market. Number 5. Diversify your portfolio. Diversification is the key to managing risk in investing. Spread your investments across different asset classes, sectors, and fund houses to reduce the impact of market volatility on your portfolio. Avoid putting all your money into a single fund or asset class. Number 6. Keep an eye on expense ratios. Mutual funds charge fees and expenses, including management fees and operating expenses. Look for funds with lower expense ratios, as higher expenses can eat into your returns over time. Compare expense ratios across similar funds to ensure you're getting value for money. Number 7. Stay invested for the long term. Mutual fund investing is a long-term endeavor. Avoid trying to time the market or making impulsive decisions based on short-term fluctuations. Stay invested through market ups and downs and focus on your long-term financial goals. Number 8. Review and rebalance regularly. Periodically review your mutual fund investments to ensure they continue to align with your investment objectives and risk tolerance. Rebalance your portfolio if needed to maintain your desired asset allocation, especially after significant market movements. Number 9. Stay informed and educated. Continuously educate yourself about mutual fund investing and personal finance. Keep abreast of market trends, economic developments, and regulatory changes that may impact your investments. Understanding the basics of investing will help you make more informed decisions. And finally, number 10. Consider seeking professional advice. If you're unsure about which mutual funds to invest in or need help creating an investment plan, consider seeking advice from a certified financial planner or investment advisor. A professional can provide personalized guidance based on your individual financial situation and goals. So these were 10 basic investing strategies for beginners. There are several more, but by following these basic investment strategies, beginners can start their mutual fund investment journey on the right foot and work towards achieving their financial objectives over time. Hope you found this video helpful, and if you did, do share it with your family and friends. And do give it a thumbs up. And remember to subscribe to Vitsikya for more information from the world of finance. Thank you for watching and see you in the next one. Till then, happy investing.